Hi, John Chin here. Wanted to welcome you to our website and give you a quick overview of the market in Atlanta and the properties we are delivering as turnkey cash flow investments in Atlanta, Georgia. So hopefully what you find on this quick overview is compelling enough to warrant more exploration on your part, more research and due diligence, and maybe that will turn into a phone call where we will talk one-on-one about your particular situation to see if maybe what we're doing in Atlanta with our turnkey cash flow properties is a good fit for you. So let's start by telling you about what we do and why we are in this market. Whenever we do our market research, we're doing our research based on three different fronts. Number one is, where are we going to find safety in our property values or growth and appreciation potential for the future? Secondly, we want tangible income now. Where do we get our best income and returns on our money today? And then lastly, we want to ensure we're in neighborhoods and markets where we will have liquidity down the road so that we have multiple exit options. Now, Atlanta, if you're not familiar with the market, is the epicenter, the economic epicenter of the Southeast United States, the travel and business hub of the Southeast. And Mark Vittner, an economist with Wachovia Bank, now Wells Fargo, probably said it best and most succinctly that if the Southeast United States, let's just peel off that whole Southeast quadrant and make it its own country, if that was the case, then Atlanta would be the fourth, or the capital of the fourth largest economy in the world, behind the US, China, and Japan, which says a lot about the city. If you're not familiar with the city, it was the fastest growing city from the year 2000 to 2010. The country on average had about a 9% growth rate in various metro markets. Atlanta, however, grew 24% from 4.4 million to about 5.5 million in the greater Atlanta market in that 10-year span. And we account a lot of that growth to the lifestyle in Atlanta, very comfortable temperatures, the ease of doing business, the personal tax treatment, and the strong rental market there. So Atlanta is a very fast-growing city. The big economic drivers, from GDP data to population growth to employment growth and stability, is all strong in this market. So from a macro perspective, we find everything here to create a very safe place for us to park our money in residential properties. You'll recognize a lot of the big companies that have a presence or headquarters in Atlanta. Of the Fortune 500 companies, about 75% of them have a presence in the Atlanta market. As I mentioned before, tax-friendly state. When you combine personal income tax, sales tax, and property tax, collectively, Atlanta offers, or the state of Georgia rather, offers the sixth lowest tax burden in the United States. It's a great rental market. As we'll see later, good incomes for landlords. It's a very friendly landlord state as far as evictions go, which is a nice little bonus for investors. And the cost of living is lower than the national average, yet educated workers make about 13% more than the national average. So you buy a lot for your money, and you're enjoying 4 very mild but distinct seasons. So 72 degrees year-round, very comfortable weather. And it is one of the markets that is in front of the baby boom migratory move towards more comfortable climates in the South. And we show this slide just to give you an idea of who our main employers are. You'll recognize some of these companies: AT&T, Delta Airlines, UPS, IBM, AirTran, Coca-Cola, Wachovia, now Wells Fargo, Home Depot. So you recognize a lot of the main employers. A lot of these employers are actually employing the tenants that are in our properties right now. There are a few different ways to measure intrinsic value of properties. Sometimes contrasting 2006 prices that were overinflated to begin with is not the best measure for discounts now. So what we're looking for is opportunity for growth. And by measure of affordability, Atlanta is the #1 market in the United States, according to Fortune magazine April 2011 issue. So what we mean by affordability is, let's compare what the rent is on a property to what the same after-tax mortgage payment would be on that same property. Now, historically in the United States, it cost about 10% more on a monthly basis to own a property than it is to rent a property. Well, in Atlanta, we see that completely upside down, where the rents on the property are 153% to 200% in some of the markets we're in of the comparable mortgage payment on that property, which is important to our landlords, because if I'm paying rent on a property that's, say, $1,000 a month, and you are my landlord, you paid $100,000 for that property, well, I can get a mortgage on that property for $800 a month and justify being able to pay you about $160,000, $170,000 for that same house. So by virtue of that affordability measure, there's a lot of upside potential on the property value of that home, just based on the fact that rents are so high compared to the comparable mortgage payment on the house. This is another indicator of intrinsic value. Intrinsic value, if you just measured it based on how much house can you get based on the median incomes in that locale, you have a very affordable market in Atlanta, only behind markets that have been destroyed by the car industry, which is Michigan and Ohio. So Atlanta, Georgia, you do have very low prices compared to median incomes there. So you have a lot more upside for growth and appreciation, especially when inventory is absorbed and financing becomes more readily available for our buyers, or our renters, we should say. Then we're going to see an instant spike in property values, maybe a slight decline in the rental market there. But again, Atlanta market, by that measure, is the #1 market as far as a bustling GDP population growth city in the United States. Now, once we get into that market, we're going to narrow the search a little bit more. This is more of an art, where we're going to find pockets in that market where we have the highest absorption rates, meaning where properties are selling fast. And so we want to see that, because Atlanta, from 2011 to the beginning of 2012, lost property values about 10%. So now we want to wait for that. We want to see a turn in the market, and we're seeing that in what we call the high-impact entry-level homes. These are newer homes built within the last 5 to 10 years, and we're seeing that on this chart here. You're seeing that those property values, the inventory, just in the last week, February 6, 2012, from the time I'm recording this, we saw a 6.6% decline in home inventory, but we saw a 6% increase in the median asking prices. So that's telling us that the market has become very competitive in Atlanta, and our inventory is on the downcline or the downhill, and then we're seeing the property value starting to climb and uptick. So we're at the bottom, and we see the turn. We're coming around the corner right now, which is great for us because we're already in an affordable market. Cash flows are very strong. Property prices are very low, but they're on their way up. So the timing couldn't be better. And we deal in properties between the price of $70,000 and about $110,000. We do this because if you go below the $70,000 price range, your yields go up, at least they do on paper, but you're going to be in sketchier neighborhoods with higher crime rates. Schools aren't going to be the best quality, and even though we show a 15% net return on paper on, say, a $50,000 property, when we account for vacancy rates, theft, vandalism when the property is vacant, and or turnover costs on just maintenance on that house, we end up netting about the low double digits, 10%, 11%. So rather than having all that stress to deal with just for an entry-level price, we deal in the price range between $70,000 and $100,000. That keeps us in very good neighborhoods, low crime rates, good schools, and we're delivering a newer home with a tenant that has a 3-year lease in place. So half of our success in cash flow investing falls squarely on the shoulder of our property manager. So we get into property management. We offer an eviction guarantee, which means that if for any reason we have to evict a tenant for non-payment of rent, then we will assume the cost to get that tenant out of the property. That's the accountability our property manager holds on their part to ensure that they're placing a quality tenant in your house. They also come with 3-year leases under a lease option. So all of our properties, when you purchase a property, as an example, for $90,000, and you have a new 3-year lease in place for minimum turnover, you will also have, the tenant will also have an option price of about 50% more than what you paid for the property. Now, Will the tenants exercise that option in 3 years? Historically speaking, tenants do not do that, but what we do with the lease option is we get a little bit more money up front. We have a family that's committing to the house long term with an owner mentality, not a renter's mentality, which obviously makes our property a little bit more profitable in the long term. We do a very good job screening tenants to include inspecting their existing property and ensuring that we're going to be putting someone in your home that will be taking care of it long term. For additional peace of mind, all of our properties have, number one, already been freshly rehabbed and renovated to a very high standard. And then on top of that, we're going to put a 1-year home warranty in place to protect you from any major catastrophic maintenance issues in your first year. And that'll cover all the major systems and appliances for the first 12 months of your ownership. Now we'll go into a couple sample properties here so you can see what we deal with in Orlando. Again, newer homes. They're always single-family homes in low crime rate, decent school areas, and you're going to see prices ranging between, on the low end, about $70,000, on the high end, $110,000. They're all cash purchases, so we keep them very simple transactions, and you're getting a very healthy return on your cash. Now, in this first sample property, $74,000, the option price is $110,000 for the tenant and the end of the 3-year lease. It's a 3-bedroom, 2-bath, about 1,150 square feet. Monthly rent on this house is $850 a month. Annual income after taxes, property management, and insurance is about $7,000 a year, or a monthly net cash flow of just under $600 a month. Our second sample property, $86,000. The option price is $150,000 for the tenant in 3 years. It's built in 2004, 4-bedroom, 2.5-bath, very large house at 2,600 square feet. Monthly rent, $1,100 a month. Our net cash flow at the end of the year is $10,000, which is about 11% net return on our cash. And we have a monthly net cash flow of $840 a month on this newer property. And then finally, our last property that we're demonstrating is $110,000 to the investor. The option price is $160,000. It was built in 2002. Larger home with 5 bedrooms, 2.5 baths. Monthly rent, $1,400 a month. Our net monthly cash flow, $1,000 a month, for about a 11% net return on your cash purchase price. So that kind of summarizes what we do in Atlanta. Hopefully, again, it warrants some more exploration on your part, and hopefully that we have demonstrated, or that we will be able to demonstrate to you, that you're going to be in a market where you have good growth, healthy appreciation potential, tangible income now under very safe long-term leases in very healthy, comfortable neighborhoods. And then we have properties that you'll have multiple exit strategies down the road, including the lease option, and you're in places and neighborhoods where you have a product, single-family home, that will be very desirable down the road. So again, if any of this interests you, we encourage you to do your own due diligence and research on the market. If you'd like to talk to us one-on-one, we'd be glad to talk to you over a phone conversation or via email. So we look forward to talking to you soon, and we hope you appreciated this overview.